Okay, so this is the second East Coast accountability meeting. Today it's going to be set up similar to last week. I'm Jack, and if anyone wants to just talk about what's happened since our last one, unless you're new, and which we can do 2 minutes of round robin, and we can go from there. Jared, do you want to go first since you're the first one up underneath of me on my end?
Sure. In the real estate world, nothing much has changed. But in my, I guess, W-2 land, I went from doing a regular tech job to now going back to Intel. So a substantial bump in pay, let's say. So basically my old pay that I used to have when I was there a year ago. So I'm pretty happy about it. And that's going to allow me to do some serious damage in some real estate. I wanted
Awesome.
to go back to work to get the take advantage of that 5% down on the fourplex, which I plan on doing. And but now I'm going to really be able to do that and go ahead and go forward with another co-living house in Arizona. So
Frank, do you want to go next?
Sure. I'm Frank, also old guy REI. Where my wife Cynthia and I are in California, and we've only been investing since 2021. We purchased our first property on our second try at real estate. Most of you guys know our story, but we tried back in '07 without any education, lost everything that we tried to purchase, or everything that we did purchase back then, went through bankruptcy, and now started re-educating ourselves in 2019. And this week in real estate, well, we're set to close on our next single family property, a 2-1 in St. Louis. We're supposed to close on Tuesday.
How many is that for you in St. Louis?
Uh, 3 single families. One is actually on the Illinois side, considered East St. Louis. It's a 2-1. We already have a 2-1 that we're going to be converting to a 3-1. That one has a Section 8 tenant that's moving out at the end of her lease, which is this coming up in August. So we'll change that over to a 3-1, and the one we're closing on is also in St. Louis.
I never realized that. Sorry, go ahead.
I was just going to say that will be door number 9 for us.
I never realized that St. Louis was in 2 states.
Yeah, it's they call it East St. Louis, but yeah, it's actually the state of Illinois.
Do you notice a big difference between investing from one side of the river to the other?
The biggest thing so far, well, I think what we've learned, we've had that property for about a year. We bought it from a turnkey provider, and the biggest difference is the taxes. They're a bit higher on the Illinois side, and so we had to take that into consideration. They raise the taxes there every 3 years. 2025 is the next year that they'll be reviewing and adjusting those for us. It doesn't seem like it's ever a huge increase, but something to consider with when you're looking at your cash flow and analyzing properties there. The turnkey provider that we work with is sending me a new list here shortly for some other properties that he's got coming up. And we're not sure. My wife doesn't like the fact about the taxes being higher and adjusting every 3 years, but it's different in different markets. I hear some states adjust every year. I can't remember off the top of my head what some of those are, but I think it might be Texas might be one of them.
Yeah, I've heard that Texas, I think they can actually readjust every year.
Yeah, I think you're right.
Florida is capped at 10% if you're not homesteaded, and it's either on the value or on the taxes, and then 3% if you're homesteaded.
Hmm.
So that being said, I'm in the second highest county in the entire state of Florida for taxes. So
So John, do you want to, since the video's recording, tell us about your news from this past week?
sure. Late Sunday, I'd been going back and forth with a verbal offer. I put in a written offer on a house with an ADU. Owner signed off on Monday, and from then to now, I've got the approval from my guy with Matt, the mortgage guy. We've scheduled for inspection on Monday, and things are moving forward. I'm hopeful, but we've got to get the inspection, like I said, on Monday. I've already paid for both appraisals, so I just need to make sure that both appraisals come in where they need to be, and most of the inspection goes okay.
When you say both appraisals, that you have to pay separate for the ADU as the primary resident?
So I had to pay for a regular appraisal on the property, and then I had to pay a separate appraisal for rent estimation.
Huh. That's
So
weird.
they're doing an estimation on the ADU side and on the 3-bedroom side. So it's a house that was converted in 08. So it's a garage, but you could use it like a 4-bedroom, 2-bath house, or you can use it like a 1-1 and a 3-1.
Are you what kind of the reason I'm asking this is when I do DSCR loans, that's all part of it. But I guess if you're doing what type of financing are you doing? Do you know, or can you share?
I'm doing an FHA, and they're looking at it like a single
okay.
family, but they're
Gotcha.
counting the ADU money, which I think is kind of a backwards way to say, well, if you're going to count the ADU, why wouldn't you treat it more like a multi-unit property? But
Okay, that makes sense.
Yeah.
Thanks, man.
yeah, on the upside, I'll know in theory what it's supposed to rent for. So I intend to, at this point, I think I'll wind up living in the small side, 320 square feet.
Randy, you're according to my screen, you're next. Do you feel like talking or?
Sure. Wish I could stay on longer. I've only got about 30 minutes, but just joined the community a couple weeks ago and wanted to at least get started and just see what everybody's chatting about. I live in Parker, Colorado, just outside of Denver. I'm an active real estate agent here. I've been doing it for 11 years. Done a lot of business, but I'm sick of the retail side of real estate and am transitioning into more working. I've worked with a lot of investors in the past, but I haven't done as much investing myself. So I'm looking to focus more on the investing side in real estate and for my clients and for myself. And then I have one rental property long term in Florida right now in St. Pete. Looking to do a few more investments down there. Probably going to be flipping that in the single family into a duplex, either this fall, later this fall, or early next spring, depending on when my tenant's ready to leave. I love the appreciation side of real estate here in Denver, but I'm not excited about some of the tenant-friendly laws that are being pushed down our throat by our government here. So I'm a little bit hesitant about getting too invested here in Colorado, other than maybe a few residences that I live in and house hack and move on to in that way. Yeah, I got a few different options for strategy. Looking at anything with seller financing possibilities, house hacking, living in the homes. My wife and I are empty nesters, so we can bounce around. We're not attached to our house, so I'm happy to turn this one into a rental and move on to the next one, that sort of thing.
It's awesome. Congratulations on that.
Thanks.
I'm sorry if I put your name, but Marlon, do you feel like talking?
Looks like he just dropped.
It must be my face. He must have ran away.
No, I
Jack,
think
you scared him away.
I think he was trying to hit the unmute button because he just muted. So I think he was trying to hit the unmute and may have accidentally hung up because he was on his phone.
Sandra, do you feel like talking?
Yes, hi. I'm Sandra and I'm in Los Angeles, and I joined a community like a month ago, so I'm just going over the classrooms, the modules. So my question is, and I also listened to the out of state, looking into out of state, but if I'm Los Angeles, should I go into like areas near my area? Like I was thinking of Fresno, which is not near here, but I know someone up there that could probably help look at properties and maintain it. Or should I try to go out of state? I'm just actually pretty confused because I don't want to spend a lot of time if there's no deals around my area. Or should I just try to do out of state? Or invest money into a long time syndication type of thing if I don't have all the funds to invest in.
Before you do that, what are your
Mhm.
goals? What's your goal?
Just cash flow.
Cash flow? Okay.
Yeah.
Well,
Mhm.
if you're looking at pure cash flow, and I mean, this is my 2 cents, pure cash flow and no real potential for appreciation, you may look at some of the markets like Frank was talking about with some of the Midwest markets. It's just
Oh, Midwest. Okay. Mhm.
or somewhere where, your barrier to entry is pretty cheap. But, if you're looking for any appreciation whatsoever, may not be the play for you. So.
Well, it's mainly cash flow, not really appreciation, because it's probably a long-term hold for us. But let's say, for example, it's in the Midwest, but I don't know anyone in the Midwest.
Yeah.
Oh, so try to find somebody that is in this group that has been investing in the Midwest.
Either in this group or online, join Facebook channels, that sort of thing. I would also ask, what's your meter? Like, are you good at reading people or are you not so good? Because that could play if you're going to
Well,
leverage people.
yeah, I wasn't going to just like find any syndication. I mean, I understand like they probably would have to be doing it for a long time and have a good record of, what they've been investing in. So that's what are you?
Not specifically with syndication. I was
Mm.
just talking about if you're going to go out and buy a property, a cash flow
Oh.
property, you're going to need a team, right? So you're going to need
Yeah.
boots on the ground, leverage networks to find out, what if you're going to leverage a property manager, which I imagine you would, look at that property manager's track record, just things like that. So, but other people probably have some more I invest out of state as well. I'm in Oregon. I live in Arizona, and it took some time to generate that team. I mean, it took me almost a year off and on. I went through, I don't know, 5 cleaning ladies, 3 accountants, multiple contractors. I mean, it wasn't easy. So finally I got to a point where I feel like I have a pretty good team, but it took a while is all. So just that was my experience. So.
Okay. So basically no Los Angeles, no Northern, like Fresno or anywhere like that.
If you're looking for cash flow, I wouldn't imagine. I don't look at those markets. I don't
Okay.
invest in blue states at all, but
Mhm.
I live in Oregon, but I don't invest here.
Mhm. Mhm. Okay.
Yeah. So.
All right. Well, that's some direction. And then I have another question, just a general question. Depending on the president that's going to be elected, how would either one affect the real estate market? Do you know something like that? I mean,
gonna be good for
like,
either
would Trump
one.
be better for investors or would Harris be better for investors?
They're both gonna be amazing for investors because the investors run the country.
Okay. So either one. Okay. That's good to know. All right. Well, thank you for this community. It's, great just to learn from other people. I'm still in the learning stage. Yep.
I'll add one more thing. If
Mhm.
not trying to get political, but if Trump gets in, you know, he's the one who passed the original 2017, the bonus depreciation. I know there was legislation that passed the Senate, and I think it failed in the House for the bringing back the bonus depreciation. It had some
Uh-huh.
support, but what happened was people piled on and put other crap in there, so I don't think it passed. But I think if Trump gets back in, he may bring that back. So for me, I'm watching that very closely because I did an 80%
That's
bonus
good.
depreciation year, and then this year's a 60%. But if he gets back in and brings it back to 100% bonus depreciation, we get all that back. And oh man, that would be fantastic for me.
Okay. Yep. That's good to know. All right. Thank you.
Certainly. Hey, Frank, do you have any videos about you selecting markets and stuff on your channel?
I don't have any videos about that yet. I think since Sandra's fairly new to the group, just like Jared was saying, he had a lot of good tips. But just to find people who are doing things that you want to be doing, you know, like we mentioned, Cynthia and I are in the Midwest. We originally started with turnkey properties, and from there branched out. We found a market that we like in St. Louis and are concentrating there right now. I also was going to mention, not to take anything away from the meeting, but since she's in LA, she might be available to join us on Wednesdays as well, and that's on the school calendar, the other accountability meeting. And there are a lot of people in there as well that are out of state that she could learn from and help her with direction. I think picking the market is going to be crucial, and then learning how to analyze deals in that market. Personally, I wouldn't lean towards syndication. It's kind of like almost like a REIT. You know, you put your money in, you got to wait quite a while to get any of it back out. Even though she did mention her investing is going to be a long-term play, but and then two, as she mentioned, Cynthia and I are in it for cash flow as well because of our age being closer to retirement age. Not that we don't have time for appreciation to take effect, but we're just not banking on it right in the beginning. If it happens, it happens.
I pasted a market finder that Bigger Pockets came out with recently for you, Sandra.
Also, the other thing I just remembered, Millennial Mike was just saying, before you fine tune and finally select your market, join one of those markets' local Facebook groups, and see what the investors in the area are saying. Because even if you don't have someone to talk to, you can kind of just watch and piggyback off the information that they're all talking about as well.
There's about 5 real estate groups in my market, and I did actually join them on Facebook just to kind of see the type of things that they were talking about in the different areas. I found it informative, although I didn't really wind up connecting with anybody.
Yeah, I think that's kind of what he was saying. It was not so much when you're still trying to select, maybe not reach out and talk to everyone, but just try to see what they're saying about their own market
Yeah.
and like kind of what the areas to avoid.
Yeah, Sandra, just my 2 cents. Sorry, I'm just popping in real quick. But so I've done syndications, and I would say it's kind of also depends what your goal is. Like you give up a lot of control, yeah, as an LP. So you're basically just putting your money in there. And so I'm assuming I've lost all my money in the syndications. They haven't officially came out with that. But like it pretty much went exactly what Zuber said, right? Money was free, money was cheap. A lot of operators were taking on a lot of risks, adjustable rate mortgages, financing. And once the rates kicked up, you know, a lot of operators got caught. So it works. I mean, you can make money. It's just you give up a lot of control, yeah, in the process. So if you have a busy W-2, or you're working a lot of hours, then that's one way to do it, right? Like if you're a doctor or a lawyer and you just need to put your money somewhere. But I would say like single family homes or small multis are probably your best way to get in. And then yeah, and then I'm not sure if you're familiar also, like, so to do syndications, typically you got to be an accredited investor, yeah. So you have to meet certain thresholds to be able to invest in those deals, yeah. So just a couple of things to think about. And then I also want to give a shout out to Kyle. I saw him on Forever Landlords live the other day. So he did a great job. So go check it out over there.
Appreciate that. That was a big step for me. So it was a lot of fun. It was a good one if you have time to follow. And he convinced me to make a YouTube channel too. Maybe I'll share that later and try
Yep.
and make some content, share what I'm doing. So thank you.
Post the link in here if you haven't already.
No, I haven't. I'll get on that.
Kyle, do you feel like talking next?
I'm sorry, did you say me?
Yeah, do you feel like talking a little bit?
Yeah, I mean, I can talk a little bit. I can just kind of introduce you myself to I know I talked to Frank and a few people. I don't know who was in it on the Wednesday accountability group. So I was just trying to make myself available today and listen. But my name's Kyle. I'm 28. I live out in the East Bay, California, Bay Area. I house hack one of my personal properties here and then have 3 other traditional rentals. So I'm year 5 in the journey, kind of higher appreciation than cash flow. So I'm just trying to figure out the next step and try and level up a little bit and listen to other people that are doing it and learn and kind of go from there. That's kind of the basics.
Armando, do you feel like talking?
Yeah. Well, my name's Armando Lopez. I just started this group probably about a week ago. I live in Los Angeles in Studio City, California. I invest in this area in Los Angeles, and I also do Phoenix, Arizona, Scottsdale, Phoenix, Arizona. I've been at it for quite a while, like about 15 years or so. So I got into real estate because I wanted to do buy and holds, and just because it feels like I always needed more cash, and I couldn't necessarily I didn't end up keeping a lot of these houses, so I have a certain sense of regret. But it got me into building new construction like spec houses and things like that. And so right now I'm as the market normalizes itself, I'm going back to what my initial intent was, to buy and hold properties for cash flow and at the same time appreciation. I do have about 3 rentals right now. One of them in Los Angeles, which is a duplex, and then 2 one in Scottsdale and 1 in Phoenix. But really considering, like, I have them rented, which they're rented at pretty good prices. But I'm looking at maybe doing some type of co-living or something like that would help me even better my cash flow. I mean, so that's kind of some of the reasons that I'm here.
Hey Armando, so I think you joined after I'd mentioned mine. I live in Oregon, but I invest in Phoenix also, and I'm doing co-living.
Okay. Oh,
So,
great.
yeah, I've got 24 units down there, 3 houses, 24 units, 8 rooms per house. So if you want to chat and collaborate, let me know.
I definitely would love to talk to you and just kind of get your experience as far as what that is and how it's going so far. So
Yeah,
we'd love to connect.
Yeah, cash flow is great, man. It's just just high level. I don't want to bog this whole thing down, but yeah, cash flow is
Sure.
great. You have your occasional, issues, right? It's not passive, but it's going good.
My only, like, as far as the co-living is dealing with, I was considering doing that in Los Angeles, Southern California, but because of tenant laws and all that, I don't even want to think about it. So looking into something like that in Arizona would probably be a good step.
Yeah, I can explain
Thank
to you
you.
how the legal stuff works. We can chat offline. We don't have to bug everybody with that. It's kind of a niche thing. So
Awesome. All right. Well, thank you guys for having us. I mean, this group and everything else so far with Michael Zuber is great. So I'm looking forward to it.
Will you be in Vegas?
I haven't bought my ticket yet, but I will. I will be.
Cool.
Mark, do you feel like talking?
Not really. I mean, but
All right, but Michael, you're next.
I'll be fast. I'll be fast.
that's a first.
I'll be fast. Yeah. So yeah, I'm a full-time firefighter in Hawaii. 14 doors in Pittsburgh, Pennsylvania, so roughly 6,000 miles away. Yeah, just really got caught in the rat race working for my pension. Realize, relying on one stream of income is pretty risky. So got into real estate, trying to build YouTube channel, social media side. So go check out Financial Firefighter, go check out Old Guy REI. A lot of people have cool channels out here. So go check it out. Waiting for Kyle's one to start. And yeah, I'll be listening in.
Hey, Mark, have you seen your properties in person?
I have not. I've seen pictures of them. I've seen videos of them. But yeah, I haven't actually been there yet.
Yeah, just curious.
So
I posted the question in the school community the other day, and I was surprised at how many people have not seen their properties. The lumberjack was giving us a hard time, telling us we need to get out and see what we have, make sure it's really there. But we haven't seen any of ours yet either. Thanks.
Yeah, I think, with technology and everything today, I mean, for it to not be there, I mean, you'd have to have like a title company involved, insurance, there's so much people would have to be on the same page for it not to actually be there. I mean, definitely I mean, as long as someone sees it, right? I think that's the main thing. You may not personally see it, but that's why it's so important. Like you're talking to Sandra earlier, having someone in that market that or someone you can connect with that can be kind of your eyes or your boots on the ground, right? So I think that's super important.
Mike, are you able to talk?
Yeah, I can talk.
Do you feel like telling?
Yeah, so I pretty much kind of hopped on Mark's coattails. I'm from Hawaii too, invested in Pittsburgh, got 2 single-family rentals, and right now I'm kind of in a holding pattern. I have to post papers for my first unit, so talking with a lawyer about that, and I'm just kind of learning that process, taking notes. And even though I would like to buy a third one, I'm kind of at the point now where it's like I better stabilize the first one, then after that stabilize, then move on to that third one. That's kind of been wrestling with that, if I should, just remain slow and steady, or if I should try to go for something if it's a great deal.
You have to let us know how that goes.
Yeah, we'll do.
Jeffrey, do you feel like talking?
Hey guys, my name is Jeffrey Suey. I live in Jacksonville, Florida, northeast corner of the state. Also invest, same place, Jacksonville. We're 100% buy and hold. We have both single family and multifamily. Probably maybe 70-30 favoring multifamily at this point. I personally own 7 doors, which is 2 multifamily buildings, a quad and a triplex. And then my family, I think they have 10 doors, and that's distributed between, I think, like 5 buildings. And I manage the whole thing for the family, basically. Personally, I've been active for 3.5 years now, really super active. I started investing in 07, which was great timing to have lousy results. And so, but I was very, very passive and really wasn't involved tremendously with that investment at the time. So I'm really back in the driver's seat now, and the strategy is for me personally, the way I kind of think about it is 10 multifamily buildings, an average of about $1,000 per month of fairly consistent profitable cash flow. And yeah, 10 of those, I think I'll be in good shape. So we're stabilizing number 2 right now. We need to refi out because right now we have about $450,000 in cash invested and no mortgage. So we need to get a mortgage on that property. And then I'm very ambitiously looking forward to getting a third before I slow down. But eventually, over a 10 to 12 year period, the general vague goal is, give or take about 10 of those.
Valerie, I think you're the last person if you feel like sharing anything.
I think that's Val Fierce.
Yeah. Well, maybe she doesn't feel like sharing. Is there anyone else that we missed?
Just you.
Oh yeah, I guess that would help. I'm Jack. I invest basically in my backyard in Pittsburgh. Grew up here my whole life. Currently working on a value add project just north of the city. Excited about that. Putting a few videos up about that, and just going from there. So since we all introduced ourselves, I'll stop the share.
Nice to meet you, Jack. I'm Curtis. You might have seen me on YouTube, PE turned RE. I invest
I've seen your channel. How you doing?
Yeah, thanks, man. Yeah, good.
Biggest Chicago Bears fan out there.
Oh no, I didn't know Mark was here.
He's just jealous.
I'm always here, man.
Yeah, so I invest in Washington, about an hour south of Seattle, in Pierce County. As of August 1st, I'll have all my units filled, and then I can finally start to work on mine to make it actually nice.
Nice, congrats, man.
Yeah, and thank you. I might get a roommate though. I'm paying under $1,000 for my part of the rent, but going from living for free for a full year to now having to pay, I may get a roommate or something. But
hey, there's nothing wrong with that. I was thinking about doing it for my current project.
I'm gonna do it in my fourplex when I buy that. I'm gonna rent out 3 of the units, and then the unit that I live in, I'm gonna rent out the other room or rooms, depending on if it's a 2-1 or 3-1.
Jared, I mean to ask you, the place that you sit like in right now, do you house hack that one as well, or is that just one you live in?
It's my primary, yeah. It's I house hack, but I say house hack, but it's basically my brother.
Oh, okay.
He's renting a room from me, but when I talk in real estate circles, I'm like, yeah, I'm house hacking, but not really.
And the fourplex that you're looking at buying is going to be in Oregon.
Yeah, that's the thing, man. I really don't want to invest here, and it really won't cash flow either. It's only if I can get a value add, I may cash flow a couple hundred. But man, so I have some funds, and I'm rolling it over in these 4-week T-bills for like 5.25, and it's killing me. And I just figured I might as well pick 50K and buy $1 million asset with that 5% down. You know, I mean, I just can't pass that up, man. You know what I mean? Like, well, they're going for about 1.2, so say 60, 70 grand, but still 5% down on that. And this is a appreciating market. So it's actually against my goals. My goal is cash flow, but because I wanted to do this place so badly, I went and got a job, and now I have income from that. So the cash flow is not so important because I was living off my cash flow, by the way. So now I don't have to live off my cash flow. I'm doing the inverse of what everybody else does. Everybody else wants to quit their job, but I got the job so I could take advantage of that 5% down because I just thought that was a good deal. So, but yeah, I'm going to buy in Oregon because it's a primary purchase, which I don't want to do, but I've been listening to Dion and others about, because this is a tenant friendly state, and about how to mitigate some of those issues that are in my concerns. And I've learned a lot in that space. So I feel like I'm going to go for it.
I thought that was awesome that you were able to find a job that pays that well so quickly.
Well, I worked there for 23 years, and you know me, Frank, I'm an extrovert, which is weird because I'm in IT and most people in IT are introverts. But yeah, I just made some phone calls and found out about a role that hadn't even been posted yet, and went and interviewed for it. And then they posted the rec and hired me pretty quickly. So that was cool. So yeah, I'll be right back to where I was before. So actually, I got paid for a year to not work and focus on real estate because they paid me, they bought me out, and I got 51.5 weeks worth of pay. So I got paid to do nothing and went to real estate, and now I'm going right back. And the kicker is I got a signing bonus. So I love that. I was like, I don't even know that was a thing. Yeah. And I'm like, really? Awesome. Oh, and I didn't lose any of my tenure either. Because if you come back to the company under 2 years, you still continue on. I was there for 23 years, so it's Intel. So
that's awesome.
Yeah, I'm pretty happy.
Sounds like you planned that almost.
It was in the back of my head, but I didn't plan on coming back into an economy where Intel's laying off and offering voluntary separation package. A lot of my former or still friends, but former colleagues are having, going away parties and everything. And so I was like, there's just no way this is going to happen. And I guess I just got lucky. So I exercised a lot of humility because for the last month or so, I've been working as a tech, like stuff I did both before I even went to Intel. So but hey, it was a job, and it was bankable, so I didn't really care about the money. Well, I did, but I wanted to have something on paper for the banks to see that I was bankable. So
You kind of have me thinking the back of my head right now. After I'm done fixing up the unit I'm currently working on, if I should switch from the smallest, move into that one, and rent out a room or two out of that one while living there, and then rent out the one I'm currently in.
Yeah, run the numbers.
Yeah, I'm not sure if there's really a market up there for that. It would be my biggest concern.
You'll be living there with your wife too, though, right? Well, Cynthia will be with you.
No, we actually live in two different places. She likes to stay close to work, and where I'm moving to is about 10 to 15 minutes from where I work. Otherwise, one of us would be stuck doing over an hour drive every day. And we both work long shifts that vary anywhere from 12 to like 16-hour shifts. And that's kind of our worst fear, is to make it 18-hour days with driving and stuff. We don't need one of us to crash and fall asleep at the wheel.
Hey, Jack, do you guys have two properties? Are you renting in the other place where your wife is at?
No, that's just where she's at, is a townhouse, and she's doing a little bit of a different strategy where she moves into a place and does a live-in construction, just
Okay.
but she buys good places with good plumbing, good electric, and we just modernize everything because they tend to be outdated.
Well, the reason
And
I'm
then-
asking is the financing on that. When you bought your fixer upper, your value add, what type of financing did you use on that?
Well, since nothing was really out or that far out, we were able to do for her first one, we did an FHA, and we found out shortly after how that was a bad mistake, and we should have just went conventional. But I mean, nothing about this place would have kept it from not passing an FHA, but it's just, like the lights need to be updated, the paint needs to be updated, or all the doors need to be redone so that they close nicer. Some of the doors don't close correctly. Back porch needs to be redone with a roof on it.
Right. I guess what
Downstairs.
I guess I was asking is because sometimes when you're, married and you go, if you have a primary residence and you go to buy another one, they're going to ask questions like, especially now, are you guys getting divorced or those type of things. So I ran into that and I had to explain, or job questions like, what you have, right? You're closer to your job. So I was just curious if that came up with yours.
It did. I just said it was for the job thing, which I'm not lying.
Okay.
And I told them that I'm an investor, which they already knew that because they already held the mortgage on another property, my previous properties. So they already knew I was an investor, and they already knew my strategy with doing this. And they were able to accept it just because they looked at how close this property is that I'm buying to how close I am to work versus how close Cynthia is to where she works at.
Yeah, it was a surprise to me because I don't think they did this, say, 5 years ago. But now with all the lending, they're slowing down and looking at things more in depth. I was kind of taken back by like, what do you care? What is your, it's none of your business. But I guess if they're lending me money, then, there you go. Thanks, man.
Yeah, anytime.
Hey, Jack, I hate to ask this question since I'm in the throes of getting an FHA. Was there anything in particular that really made you feel like it was a bad mistake?
My biggest thing about it was when it was all said and done between the extra paperwork and the extra fees, and granted, it could have been just this mortgage company in general, but when it was all said and done between the conventional, because Cynthia has a lot better credit than I do, between her having such a high credit score and doing a conventional loan, it was less than $8,000 difference. And now we have a mortgage, the mortgage fee or whatever it is, which insurance, the mortgage insurance, which is like an extra $100. So when it's all said and done, it's just it wasn't really worth it for us. So this is probably gonna be the one and only one that we do like that. It just happened to be a good thing in a way because our goal is to at some point refinance this one anyway.
Mm-hmm. Okay. Yeah. In my particular situation, it's kind of what fits, and a conventional really wouldn't fit for me, especially with a single income.
Yeah.
So, I'm okay paying the MIP or PMI. I'd be paying it even on a conventional at 5%. So,
Okay. Yeah. So it wouldn't make a difference for you.
no, it wouldn't for me. Okay.
Yeah. The 5% when Cynthia bought this place wasn't a thing back then, and it was 20%. And like I said, with the fees from the mortgage company and everything else, it kind of just wasn't really worth it for us. And I kind of wish we wouldn't have done it that way.
Yeah, I think at the point that I can put 20% down, I definitely wouldn't even think about an FHA. So
Yeah.
Yeah. All right. Just curious. Thanks.
Yeah.
Are you guys getting excited for the potential future interest rate drops?
I didn't hear about it. I was out in the woods all weekend.
Oh, well, I'm just saying in general. So, I mean, at some point in the future, I think fairly near future, I'm excited because I've got one of my properties is 7.65, another one's 7.5, and then the other one's 6.25. So if we get some drops over the next year or so, man, I can't wait to refi all 3 of those suckers.
Yeah, I can't wait. I'm looking to refi that triplex, get some cash out of that, and try to still cash flow it. So that's gonna be very helpful.
Yep. Are you guys
Yeah, I'd be
noticing?
interested.
Oh, go ahead.
Oh, I was gonna say, yeah, I'm looking forward to that. I'm hoping that I can get, so the double duplex, the project I was just talking about up north, it's on 2 separate lots. So I'm hoping before they drop the mortgage rates, I can get through all the projects, get it reappraised. I'm hoping to have both, what do you call them, lots put into one. So it's actually truly a 4-plex instead of just 2 duplexes to have a roof to connect them.
Hmm. I guess I'm not as excited to see the rates come down too much too soon because I'm paying a little bit extra to get down to 6.25 for mine.
Oh yeah.
But I'm assuming that rates are they're gonna come down some, but I don't know that they're gonna really come down that much. And I figure more like in the, we'll say 3-year or 5-year mark, they'll still be lower than the 6.25. Hopefully enough appreciation, maybe refi out and not pay PMI anymore.
Yeah, I've been watching the economy, and I know if you guys watch a lot of those channels too, like Zuber and whatnot, but Jeff Snyder and those guys. But I personally believe with some of the stock hits and some of the company issues, there's going to be some layoffs, and I think that unemployment is going to spike up, and over time, that's going to cause some dramatic impact, and then I think the Fed will probably drop at that point. So I paid an extra, my last 2 properties I bought, I paid extra to not pay the prepayment penalty. And I paid the payout to buy the prepayment, not, I don't know what you call it, but I can refinance in a year without paying a prepayment penalty. Because by default, the DSCRs I was doing were 5 years. And I'm like, I don't want to pay that. I think it was like 8 or 9 grand penalty to do that. I think it was offset by years, but still, I didn't want to pay that penalty. So I paid a little bit up front to be able to refi in a year.
Yeah, I'm paying 1 point to get down to 6.25, which for me makes it cash flow because otherwise it's a real thin otherwise, but it puts a roof over my head. So
yeah,
still
good.
A win.
Yeah.
So although I will officially announce I did not follow Marco Shiro's advice on paying points. He said I shouldn't. And
Wait. I did not say you shouldn't. I said exactly kind of like what you did though, right? Because it gives you a little more cushion, then it can make sense to buy it down. So it gives you more wiggle room. Like you're saying, it makes it cash flow and it puts a roof over your head. So if you just look at from strictly numbers, right, it probably wouldn't make sense to pay it down because you'd rather keep that money in your pocket up front. But like you're saying, it gives you a little bit more of a buffer for your cash flow and you're getting a roof over your head. So in that sense, it probably makes sense to buy it down, right?
yeah, for me, I think it was 32 months is where I figured I'd be getting all the money back anyway. So in the meantime, the other reason that I really did it was because I figured when I buy a second one at hopefully a year and a half, whoever's lending me the money is going to look at the lower mortgage payment as a more positive thing versus, oh, he's got a couple thousand more in the bank. So I thought that was much more important to have a better shot at a debt to income.
Yeah, absolutely, man. No one way to do it, man. You just gotta whatever you're comfortable with, and just the only other thing is just you gotta keep in mind, like you're saying, if you are thinking of refinancing down the road, you basically lost that sunk cost, right? That you paid to pay the points down up front, right? Because you're gonna have to pay again to refinance, right? So it's almost like like you're saying, there's that cutoff point to where you're gonna get your money back or break even, but that money that you're putting down up front is almost a sunk cost if you refinance in so much period of time, right?
Yeah, if it's less than 2.5 years, but I don't know that the little bit of principal pay down and the appreciation is going to really be enough to get me out of PMI anyway. So it's going to negate any kind of notable interest rate savings unless interest rates, and I would not wish this on the economy, but if interest rates go down 1.5 points, almost 2, then it would be different anyway, because you'd still be saving more than enough to offset the fact that you didn't break even on the points paid ahead. I think that
Didn't
makes sense.
Didn't matter. You need to sleep at night, and so that cushion for that extra points, I think, is worth it.
Yeah, exactly.
That's actually, yeah, that's really it right there.
Yeah, that's
Yeah.
the way I
Yeah.
see it. Some things aren't always financial.
Yep. And you have a roof over your head now.
That's right. And it's a new roof this year. So
Woohoo!
yeah, it's important in Florida.
Yeah, and that probably lowered your insurance cost to the new roof, right?
Not really. No.
Oh, really? Okay.
No, I'm looking at, I think it's 1,900 for a year.
No, that's not bad.
And the only one that'll touch it is the state insurance fund.
Oh man, yeah, that's weird. Hopefully, if something happens, you actually get it fixed.
Well, I did find out that what they do is they put you in the fund for the first year, and then they kick you out of the fund and send you to these smaller insurance companies that are moving into Florida because all the big ones are moving out. So we shall see how that goes.
What do you guys set your deductibles at on your rentals? I put mine at the top 10 grand because it lowers my, premiums, but also if something happens, I'm not going to make any claims unless the house burns down anyway. What do you guys do? What do you set your deductibles at?
The financing that I'm getting, the max is 2,500.
Oh,
I wanted to go to 5,000. But I want to say I asked that kind of a question in, I think it was actually Lumberjack who said, that he was like, as much as it can be, and I'll set the money aside and I'll eat it all the way up to like 20 grand. So that gave me a lot of confidence to say, okay, well, if I can get 5,000 on a deductible, I would do it. Maybe the next company that I get will let me, but that's my thought.
Yeah, I do it to lower the premiums, but the real thing is, if something does happen, I'm paying for it myself because I don't want my rates to go up across my portfolio. Because they're right now, sure as crap, they would do that. And I've already had a claim too, $30,000 water damage claim. So I'm really in trouble if I have another claim. So
Yeah, we don't want to do any claims, and we haven't tried it yet, but we're going to do the best we can to try to increase our deductibles over time. Because right now our deductibles are, I'm pretty sure most of them are pretty low. And so we want to kind of slowly increase those over the years, and then just stack the savings that we make into a slush fund, which will help us to transition into more of a relatively self-insured place.
why slowly? Is there a strategy there?
Just cash. Like if we have, let's say they allowed us to change our deductibles next year to all $20,000 deductibles on, I don't know, what is that? Six, seven buildings. And then we have a catastrophe, which is not out of the question in Florida, right? We could get hit by a hurricane. We got sinkholes. We got termites. There's a million things that happen to people here. And it could happen all at once, especially if it's a weather event or flooding or something like that. So if we don't have, 125,000, 150,000 set aside next year, and yet bad luck.
Gotcha. Okay.
Yeah. So it's just from a risk mitigation perspective, like over a period of, let's say 3 years or 4 years, like we could have that kind of cash stacked, right? But not in year one. The initial savings will just be probably too small.
I was thinking there was some sort of strategy there where the insurance agents or the insurance companies were looking at things, or that's where my mind went. So thanks for that.
Yeah, that's a good point. I have not considered that because we haven't even tried it yet. But that was our initial, we don't have, 150,000 in cash to blow on repairs alone just to get the buildings functional. So we need that stopgap to some extent on some of the properties. depending on our cash position. Maybe after we refi out of the triplex, then we'll be more comfortable with being more aggressive in that respect. But right now we are broke, so no so far just yet.
I got a question for you guys, if you don't mind.
Go ahead.
So I've got a portfolio of whatever, 25 properties, something like that. And I've got a shitload of equity in probably half of them because I bought them 3 years ago on seller carryback at 4%, interest only, whatever. And I'm sure you guys a lot of you are in a similar situation with the equity piece. Has anybody figured out a good way to utilize the equity, like whether it's a line of credit across, the entire portfolio, or some kind of like HELOC for an investment type property? Or that's the one thing I haven't been able to figure out is a line of credit to be able to utilize some of the equity. I'm just curious what you guys' thoughts are, if you have any.
I took a HELOC out on one of mine, and I'm using Velocity Banking to pay down principal. So
is that so none of my properties are 30-year fixed that I've lived in or whatever, like traditional mortgages. So is the one that you're talking about, what kind of financing did you have on it, or how did you go about doing that?
yeah, that's my primary. I've heard that there are, I think the one mortgage broker through Bigger Pockets, they'd advertised that they do HELOCs on rental properties, and there's a couple others out there that do that as well.
I know.
Gotcha.
I was talking to Matt, the mortgage guy, or one of the people that work for him. They do that, but I ended up using I'm kind of torn on whether to use them or a small community bank. It seems like the mortgage guy, who's part of the ORAC community, is going to make it a lot simpler than the community bank is going to. So I might go with them.
Did you say you use a small community bank?
No, I'm torn between whether to use a small community bank or the Matt, the mortgage guy people. It seems like the Matt, the mortgage guy people are going to make it easier on me versus the small community bank. But I also want to talk to a credit union nearby and see what they would offer too. And I'll probably just pick the best one out of 3 of those options.
So
William, what are you thinking about doing? Are you doing one at a time, or are you going to try to do like a blanket across multiple?
They kind of want me to do a blanket across all of them, but I really just want to do one at a time, honestly.
Yeah, it makes it cleaner.
Yeah.
What's your goal, William, for doing this? You just want the cash, or you're going to scale up, or if you got 25, you want to go to 100, or what?
Yeah, without like going into a long story, the last 2 years have been absolute like hell. I was like in 2021, I was just doing really well, doing flips, buying rentals with the profits, doing some wholesales, whatever. And then I'm in Arizona, so I'm in Scottsdale. And when the market shifted, I got stuck with like 14 properties that I had already planned on selling to a hedge fund. And obviously, once the rates jumped, they walked away. So basically, I ended up with 14 properties that I didn't intend on owning because I was double closing to them and whatever. So it took me like 2 years, basically until last month, to just clean everything up, sell stuff off, And so right now, I'm just starting to, market for additional deals, preferably like some flips and stuff. And obviously rentals as well. But the last 2 years would have been a lot easier if I would have had access to, like $500,000 or something like that. So yeah, part of me, I want to scale up, but I also just want it as like an emergency type fund, because I've learned a lot, so I probably won't have that happen ever again, hopefully. But but I just realized that access to the capital is so important, like especially for what I do.
Right. The reason I was asking is I've heard of strategies. You said you had seller financing. If there's any way you can consolidate that and get one property cleared free and clear, then you could use the first lien HELOC position. Now that's a little scary for some because of the variable rate, but I've seen people scale by taking one of their free and clear properties, especially if they have a seller note on that they had a seller note. And what they'll do is, even if you don't have it free and clear, let's say you have a 100% financed property through seller finance, right? You could negotiate with them if they wanted more of a payment every month. Like, let's say you were paying 1,500, $2,000, whatever, and you say, hey, I'll pay you $3,000 a month if you just take the lien off the house and put it on your LLC. And then you basically move the note from the property to the LLC, and now you have a clear property. And then you leverage that property, whatever it's worth, for a first lien HELOC at 80%. And you can take that 80% and scale and scale and scale over again. Now you are leveraged, right? But I'm just saying since you have 25 properties. Yeah, because you've got wiggle room, right? So that's a little bit more of an advanced strategy, but I've seen that work for people.
Do you know what that's called? Is that like substitution of collateral?
It's called getting real creative is what it's called. It depends on, I've seen it work where
I love it.
Yeah, it actually came to fruition because the seller finance said, hey, is there any way you can give me more money? They were in a rough position and they needed more money. And so that's what they negotiated. And then that's sort of taken off in the last year or so. People are starting to do that. It's kind of like a badass burr.
That's really cool.
Yeah, it's interesting.
Yeah, because I've heard of because I've gone down rabbit holes in the last year with seller financing, especially. I've heard of putting a certain amount of terms or whatever in the loan to be able to keep that loan, like say you have a 30-year fixed and it's attached to this property, but you sell that property and move it to another property. So I don't know, that might be kind of similar, but it sounds like, so you just move instead of having it attached to the property, you have it attached to your entity, which also already holds the property. So technically they're still, right?
Yeah. And the incentive for the seller is the seller finance, the bank, in this case, them is the more cash flow. But, obviously you'd have to have a pretty good relationship with the seller finance. Also, your LLC probably shouldn't be brand new, have some history behind it, that sort of things. And I know some people are spinning up separate LLCs and having like maybe one or two properties inside those, and then using those to leverage this kind of play in case something does go south in the future. They don't take out their whole, portfolio or whatnot. But anyway, I was just throwing that out there that since you've got 25 units.
I never thought of that.
Yeah, I hadn't either. And I actually know the guy who's doing it. He started off as a property manager and he's still doing it. But it came at him sideways. He didn't like dream it up. It's the seller finance. They were they had a family member in a nursing home, and nursing home costs just skyrocketed. They needed the money, and so that's where this kind of blew up out of. So anyway, just an idea.
That's super interesting. No, I like that. That probably will work in some way.
I'm in those circles. I'm using a second lien HELOC on my primary, but I'm using that to do velocity banking, which is somewhat in the same realm, I guess.
So what is velocity banking?
Oh, it's if you're really good with money and you're disciplined, you can leverage debt to pay down debt, is essentially what it means. So in Australia, they have 5-year notes on homes. And so a lot of people down there wanted to get their homes paid off within that 5 years so they didn't have to refi into a higher rate. And so what they started doing was leveraging other debt. In my case, it's a second lien HELOC. And what you do is it's basically just like a credit card. So your HELOC is based on average daily balance, whereas your mortgage is based on an amortized, 30-year fix, let's say.
Yep.
So you're paying that first. Now, just so you know, my goal is not to pay off the mortgage at all. My goal is to pay down that interest that you're paying, right? So, your first 7 to 10 years is basically interest, 75% interest. So what I'm doing is I'm using my HELOC to pay. I did the math, 28 grand. I did this with the 40 grand. I paid it off in 4 months, because what I do is you treat your HELOC as your bank account. You take every single dime you make, put it into your HELOC. So the way mine works is I started off with 40 grand. And then my net cash flow was about 8. So then it popped down to 32. But then throughout the month, obviously your bills, because you use the HELOC to pay all your bills, you basically treat your HELOC as a checking account. And so that's how it works. And then over time, it yo-yos up and down. So you say you start with 40, then you come down to 32, and then 26 or whatever it works out to be. So your positive cash flow, whatever your net positive cash flow is, basically the increments you can count on. Because one of the things that you might not consider is if you're putting all your money into the HELOC, that satisfies the HELOC payment. So all I do is I do my math on the interest that I would pay throughout that month. So that's the only difference. So if you have positive cash flow, boom. Yeah, it's an awesome strategy. If you just Google or get on YouTube and look up velocity banking, that's what I'm doing. And there's some naysayers out there. A lot of people say, oh, that doesn't work, blah, blah, blah. And I was one of them, by the way, a couple of years ago. I was like, that's BS. And I dismissed it. And then recently my realtor actually is doing velocity banking, and he's like, I asked him, does it work? He's like, oh yeah, man, I've got, all my properties about 40% loan to value. I'm like, what? So I looked into it, did the math, and I'm doing it too. And I've done it. I've done a cycle already, and it works. And I'm just blown away that actually works. And I'm pissed at myself that I didn't look at it a couple of years ago.
Start earlier.
Yeah, I think it was I forgot the guy's name, but he's a crap, I forgot the guy's name. But anyway, he released a book on it, and he said how to pay your mortgage off in 5 years. And I was like, that's Clayton Morris, that's his name.
Okay.
And so I dismissed it, and then I learned later that I'm a dumbass, and I probably should have paid attention to that. But yeah, it's a great strategy. I've got one property at 60% loan to value now, another one's at 66, and another one basically has no equity in it. But so I'm going to attack that one next. So I'm just trying to pay down to the point where most of the payment goes to principal, and then stop, and then let the tenants pay the rest. Because I just want to get rid of that interest. And I did the math on the interest. It cost me, I think, $1,000 to save $56,000 in interest. Because I pay, you are paying your interest on the HELOC. But if you could pay down, I switched to 28 grand because that's the dollar amount that works for me. I have 105K HELOC, but I don't want to take the whole thing out. I want to target, I'm chunking. They call it chunking. Sorry, I'm stealing the whole thing here in velocity banking, but it's an interesting strategy if you want to just pay down your debt to a point where you have more cushion, let's say, and then refinance later and cash out, and then take advantage of that.
That's awesome. I'll have to look that up. Never heard of it.
Yeah.
What level of equity do you have to already have in a property to be able to get that kind of a HELOC?
It depends on the bank. What's funny is I have about 450K in equity in my primary. And when I originally did through and by the way, I did some research on this. If you're a cheap ass like I am, the cheapest one out there was PNC Bank. It's $50 a year. It's unreal. A lot of them will do this thing where they'll charge you, $300 a year or whatever it is. But one of the things you have to watch out for is all of them, except for PNC Bank that I interviewed and talked to, wanted you to take out either 50% or 100% of whatever your HELOC balance was, and then take it out and then put it back. I'm like, that makes no freaking sense whatsoever. And then I started looking at the small print. The broker or whoever the person, they get the company that's doing this, they get a percentage of whatever's drawn. So that's why they're doing it. So PNC Bank didn't do that. PNC Bank is the bank. They're not a broker, and they didn't ask for any of that. But basically, at the time I was doing it, things were a little dicey, and it's probably dicier now. But I had about 400 and maybe 400, let's say 400K in equity, and they only gave me 105K HELOC, which is fine. I only needed a little bit anyway, but originally it was going to be 200. But then they came back, and the underwriters or whoever, and things were getting dicey, so they chopped it down to 105, which was fine by me.
But Jared, you also said you only use roughly 28,000. Is that what you said?
Well, that's what I'm doing now. I think I'm actually at 32, but the first one I did was at 40. But I don't really count that one because I did put 10K down almost immediately to get it down to 30. So yeah, about 30, I'd say.
Yeah. So John, you don't necessarily need a HELOC. You can just get a line of credit if you can, and you basically use your line of credit in a similar fashion where you're paying everything out through a line of credit. and everything funnels through there though. So your paychecks, all your money coming in is going to funnel through your line of credit to keep that balance or the simple interest as low as possible. But then you're making chunks of payments towards your principals on the
Right.
properties. So you don't necessarily need a HELOC. It's just a lot of guys use a HELOC because it's easier to get, and a lot of times the terms might be more favorable. But if you can get a line of credit from a bank, a personal line of credit, you can also use that in a similar fashion.
Yeah. I would add one thing though. My lawyer told me to, so my personal income comes into my personal checking account, and then my business income comes in through a business account, but then both of those pay the HELOC, or in your case, the line of credit. So I would separate where the income comes. So if you have rental income, have that go. If you have an entity, if you don't have an LLC, then don't worry about it. I'm trying not to pierce the corporate veil, so to speak. So I'm trying to keep everything separate.
Okay. I've seen a few videos on the velocity concept with the line of credit, and at the time it just didn't really connect with how it could really work for me. So maybe I'll take another look at it, assuming I get to close, which hopefully, fingers crossed.
Right. I'm cheating too. I'm supercharging mine because I took all my rental properties and I put it on a business credit card. It gives me points. And so I'm doing I'm double velocity baking, if you will. So all my utilities that would accept a credit card are being paid from the credit card, and I get all those points, and it gets paid off automatically anyway. So I'm cheating, but hey, man, it's cool. I fly for free, and
I had to pay for the appraisal, and I'll wind up paying for the survey as well. And I'm using a credit card so I can get the points.
Yep.
And then it's still, going to come off of the balance of what I have to show up with closing. So
yeah, and you get the write-off. Yeah, man, take advantage of everything. You get the write-off for that too.
Does that impact your taxes as far as, or I should say, do you have to have a tax approach if you're going to do this to pay that down faster to get the equity lower in the properties?
What do you mean?
I mean, you're getting to write off the interest that you're paying as you go. If you all of a sudden take a property down an extra 20% in what you owe, you're all of a sudden paying a lot less in interest. So that's reducing the deduction that you would have gotten for the interest coming out.
A little bit. It doesn't actually take it down that fast. What you're doing is you're knocking out that. So yeah, it is, but I don't care. I like to get that loan payment down. But I mean, you're talking every 28 grand. It's like the interest comes down by like $100 or something. But what's changing is the duration, right? It knocks off about 3.5 years of that 30-year amortized mortgage.
Okay.
So it's taking your duration down and the interest at the same time. So you're saving that interest overall, right? So
I think I could get even more on board with that idea. Just because I'm a little closer to retirement than some of you young guys.
Yeah. Well, I'm 50, so I'm not a spring chicken. But I just don't want to give the banks that extra money. And I figure, why not use the bank to help pay down, right? Knock out all that interest. But I don't want to pay off the mortgage. I want to keep the mortgage.
Yeah, I would want to keep it, but the idea of being able to shorten it like that, and then, I think there's parts of that I could work more than one way.
Yeah, and then when we get to the point where we do have rates favorable, then maybe cash out refi, or I'll do the math, just refi and leave the equity in it, depending on what cash flow needs I have at that time. So at 5%, I'd cash flow an extra $1,500, but then I gotta do the math on that opportunity cost. If I could cash out refi and get 100 and some odd grand, and then go buy another property, and then leverage up.
Do you have a target of number of properties you're going for?
I don't have a property target. I have a dollar amount. We're trying to hit that 10K a month, but I have a dollar amount, but I have it in tiers. So like my first, I had short-term goals, like get a property. That was my last year goal. And then this year was get 2 properties. So we got 2 properties. So that was my short-term goals. But based on, we're hitting about $1,200 a month on each property. And that's average. Like one comes in about 1,000, one comes in about 1,800, and one's about, 1,400, that sort of thing. But on average, say 1,200 conservative. Next month will be higher. So we're coming in what, let's say close to $4,000 with on average with other stuff, right? So I'm $6,000 away from my income goal, but that's tier one, right? I want to get to that first platform, if you will, and chill a little bit. And then I'm doing the Coach Carson thing where,
Okay.
he says you don't climb a mountain in one day. You climb the mountain and get to your first camp, right? And hang out at camp and then move up. That's kind of what my mentality is.
Hey, Jared, a question for you. Do you have a preference in credit cards that you use for that?
I just went with, well, I do like the Chase has one that I haven't been using, but Chase had a really good one, the Sapphire. It allowed you to move your, let's say you were going to travel in the future, you could switch your points to air miles, right? For a couple months or whatever. Let's say you have a big like I had a contractor, and I spent 27 grand on reno. And so I put it all on the credit card, and then that got me a bunch of points. And then the next month I didn't need any more in that space. So I told it to do cash back, but I haven't been using it anymore because that's a personal. I've since learned about personal and so now I have a Bank of America business credit card, and then Bank of America business account, and then PNC business account and a PNC personal account. So now I'm using a 0% card. Oh, that's the other thing I should mention. The reason I'm doing the utilities and the velocity banking, because it's a 0% card for 12 months. So why not, right? But that's a PNC credit card, and I don't actually know what I should check. I don't actually know what if there's any value add at all. And I know I sound dumb saying that, but I did it because it's tied to all of my, all the money comes into PNC. So because that's where the HELOC's at. So I don't want to have to like move money around between accounts. I want it all in one place. So I can just simply do a transfer. So when the money comes into my personal checking, I transfer it to HELOC. When the money comes into my business account, I transfer it to the HELOC. So my checking account balances are both zero balances. And you're asking yourself, well, wait a minute, then how do the mortgages get paid? Well, I have overdraft on both of those. And so what happens is it overdrafts, and the overdraft protection is the HELOC. And so it's a little weird, but that way I don't have to sit there and say, oh, I have to make all these mortgage payments and go through and move money. Like I don't want to automate everything that I can. I don't want to have to manually do anything. And I did check with the bank like 3 separate times. Like, hey, is this going to affect me negatively at all because it's overdraft? They're like, no, as long as you have money in the HELOC, you're good. I'm like, okay. So, and I do get every month, I get, I don't know, a bunch of emails saying, hey, your overdraft kicked in. I'm like, yeah, thank you very much. I know that set up like that by design, but, and I also get one of them that says you have low balance. Well, yeah, it's zero all the time. So yeah, I'm a little weird, but it's working for me. So
Yeah, I was just thinking as you were talking, I was like, I probably should start looking at update my credit cards and stuff, because the ones I currently have are the same ones I've had for 15 years. I don't want to cancel them because I'm afraid I don't know what my oldest debt is. And I read somewhere, and I'm not sure if it's true or not, but if I, like, let's say it's the one credit card is my first thing, then it cuts off to the second thing I had, which could be, a line of credit or something that might only be, 10 years old, or, I'm just making up numbers. And I don't know if that's true or not. So I was always afraid. I keep a zero balance on them. I might spend
Yeah,
like,
never close it. Never
yeah,
close a credit card.
yeah, don't close them. If anything, lock
Yeah.
them. Most of them have a lock
Yeah.
feature.
And
That's what I do.
just this might be helpful for you guys. I did do a freaking, what is it called? Credit stacking. Have you guys heard of that?
Yeah, I've heard of that.
Okay.
I'm not familiar with it.
It's a mastermind group. I can't remember the guy's name. It's been a while now, but I just took basically a course and learned about, business credit versus personal. And I know you were kind of going into that a little bit. I'm not sure if this is still available, but the best business credit card I ever found was it's the GM business card. It's by Goldman Sachs. GM Marcus is what it is. Anyway, if they're still offering it, you can literally get like I got 50,000 between 3 different entities, and it's 0% for 18 months, and do that all without a hard credit pull. So you have to like answer the questions correctly and whatever, but you can keep doing it. If you do it wrong, you can keep doing it. Anyway, that's something that I'd definitely recommend for everybody, is just look into that card, because they do a soft credit pull, but they don't do a hard credit pull. And then now you have 18 months of zero interest, and you get one of them's 20, another one's 20, and one's 10. So you get access to, quite a bit of capital like that. And then the other thing is that you max them out, it doesn't hurt your credit because it's on the business side, not on the personal side. So that's one pretty big hack that I learned in the last year.
Thank you. Yeah. Yeah, like I said, I need to update my credit cards and try to do something different. And when Jared's talking about stacking points, just having playing utility bills, I was like, well, there's a perfect opportunity. Does anybody else want to talk about anything?
No,
I guess one more thing that I have just in the last 2 years that I've kind of out of necessity learned is there's a company called Oxford House. It's a sober living like entity or whatever. But I have 4 of them right now, and they're the best tenants I've ever had. Pretty much everybody that I've spoken to that has an Oxford House rental is never going to do another rental. Like, they're only going to do Oxford House rentals because they're just so good. It's really unique, and if anybody wants me to go into it in detail, like, let me know or reach out to me. But essentially what it is it's like, say it's $165 a week or something like that for them to check in there. But for every new house that they open, they create a new entity, a legal entity on behalf of that house. So then everybody that moves in there, they sign paperwork, like almost like an operating agreement. And then all of that money goes into that bank account, or house bank account. So like 3 of my properties, these people have 15 grand, 11 grand, and like the other one's kind of new. So they have like 6 in there. So like, you're never going to not get rent. Like, and they're always about 25% over market. Like, I have a property right now that's a 2,300 square feet, split level, 3-stall garage, no HOA, with a RV gates and like a slab for parking or whatever. And I bought that thing for like, $325 or something. Basically, I have $350 into it right now. They just offered me $3,500 a month. They sign a minimum lease of 3 years. And basically their business model is, once they get a lease on a property, they want to rent it forever. So it's, they're really good.
So that's an arbitrage.
What's that?
That's an arbitrage deal where they run it and you just own the property and collect you have one tenant, which is Oxford.
Yeah. But they're like a nonprofit type thing. They've been around since the 70s. There's, if anybody wants to look into it down here in Arizona, I have the guy's cell phone number that runs it all down here, and they've grown, I think, from like 20 to like 100 in the last 2-3 years or whatever in Arizona, but they do it everywhere. So there's a lot of information I can give you guys if anybody wants that.
Armando and I are in the Arizona market. So I've got
nice. Okay.
Yeah, I've got the 3 properties down there, and I might take one of them after my lease is up with pad split and turn it into something like a sober living, but I don't want to run it. So that's right up my alley. All my properties are 8-bedroom houses, so they might like something like that.
Oh, for sure. Is there a way to, if I just drop my email in here or whatever, if somebody wants to shoot me?
That'd be great.
Sorry, I'm driving. I'm having a hard time there.
I definitely would be interested in that as well. I mean, I do new construction stuff over there as well, fix and flips, and then I have about 2 buy and holds in Arizona. So I have crews and I have all that. I'm actually looking, right now I'm in construction mode basically, but in the next few weeks, months, I'm going to be looking for more deals. It sounds like you have some pretty good deal flow too. So maybe we can connect in that sense.
Yeah, that'd be awesome. I just dropped my email in there. If anybody wants to, just shoot me an email and love to connect.
Awesome.
Sounds good. Appreciate
Thanks,
it,
man. Yeah, I think me and Armando should hook up and chat.
Oh, for sure.
All right. Thanks.
Friggin' 101 is like shut down right now, so I'm driving all the way through town up to North Scottsdale.
Where are your properties? You're saying you're driving up to North Scottsdale. What do you do most of your properties at, or do
So
most of
yeah,
your
Scottsdale.
business?
I live in McDowell Mountain Ranch up there in Scottsdale. The probably 50 to 60% or so of my properties though are in Casa Grande, because I ended up I learned about the cost seg or whatever back in 2021, and I was going to have a huge tax bill. So I learned about that, and then I found a portfolio of 10 properties from my marketing, and they were all free and clear. So that's the portfolio that I bought on seller financing to be able to wipe out that tax bill. So and before that, I'd never actually been to Casa Grande even. But since I bought them, I spent a lot of time, and I really like it for rentals and stuff. Specifically flipping, it's good too, but not right now. Right now it's pretty bad for flipping because it's on the outskirts. But for flips, I kind of do them everywhere. I have rentals over from Goodyear all the way over to Santan Valley. I've done flips up in Casa Grande, Cave Creek. So kind of anywhere that makes sense, really. I have 3 of my Oxford houses they're in Phoenix, but they're right on the border of Glendale. So yeah, kind of everywhere. But I started investing down here in 2011 because I grew up in northern Minnesota. When I was in law school in North Dakota, my roommate and I started a fund. Basically, we started buying properties at the auction in Santan Valley and Pinell County here. So that's kind of how I got my start, and I got really familiar with Arizona. So then I moved here, and I've just kind of kept growing and building and doing what I can.
Do you manage, other than the
Awesome.
Oxford house, do you manage your other properties?
I have a property management company as well that I own. Well, I'm not like actively involved, but so we ended up getting about 70 single family homes in Santan Valley and one subdivision back then, which you could do because there was just thousands of foreclosures. And we started with 3 property managers, then weeded it down to 2, and then we gave all of them to one because he was the best. And so I ended up a couple of years ago, I reached out to him and I ended up partnering with him. And he's like one of the only people that I've ever known that loves property management. To me, it's like the worst thing in the world. But he's really good at it. So we started a property management company together. And,
What's the name?
So yeah, it's called Helios Property Management, like HELIOS.
Thanks, man.
We started like right in 2022 or something, and we started with just our rentals that we had together, but we've grown quite a bit. We're up to like 200 units now, and just continuing to grow. It's a pretty interesting business, because like making like one change of like $5 a month across all the properties just makes a huge difference. So it's pretty cool.
Yeah, people underestimate that. I did a little change in even my little portfolio with my cleaning lady. So she was charging me X, and then I was looking at her process, and part of the process for when I do a room flip is to change out the mattress cover. So, and then she had to wash it and all that. Well, that took time. It takes half hour, 45 minutes or whatever. So I said, how about I just buy extras? You just swap them out and then you wash them at home or whatever. She's like, yeah, sure. So that saved me $10 a flip, which is about $30-$40 a month, which, across, that was with one. Yeah, it adds up. So you're right. Looking at those small details matters over time.
For sure. And that's not the way my brain is wired, just in general. So it's really good for me to have a partner like Lance that his brain is wired that way, and you know.
Is his last name Lambert? Just kidding.
Oh no, it's Lance. His name is Lance Brace.
Oh, okay. Well, this has been awesome, guys. I got to get out of here, but I really appreciate you guys sharing all this knowledge. And thanks, Jack, for running it today.
Yeah, I agree. I'm glad I jumped on. I had a plumbing issue, and I was going to hop on at home, but then I had to run to this property, so that's why I was a little late. But I'll definitely keep coming every Sunday.
I sent you an email already, William. So.
Oh, nice. Okay. Oh, well, I'll get back to you right when I get home. I'm about 20 minutes away if they don't shut down the road.
All right. See you guys.
All right, George.
You guys take it easy.
All right.
Sorry, I was reading the comment section.
Yeah, Mikey's spying on us, I think.
Aren't you technically in with Frank's as well?
Who, me?
Yeah.
I mean, I just go in to make trouble. I try to sabotage that one.
Oh, so you're trying to make trouble here and there.
I try to make trouble everywhere. Yeah. Can't just talk about real estate the entire time. Gotta have some fun.
Maybe not today, but at some point I've got to talk about how my brain wants to look at the area of the yard that I'm going to have for the ADU. My brain wants to turn around and look at it like a homeowner and not as a person who's just renting there until I get another one.
Yeah, I think that is I mean, not in our community, you don't see it too much in these type of communities, but I think that is the biggest obstacle a lot of times, right? When people purchase a home, right? They don't have that vision of how are they going to scale or how are they going to leverage this into the next property, right? They're almost looking at it as a one and done situation, and this is my forever home for 30 years. And so I think that's kind of the obstacle a lot of people fall into. And but yeah, if you look at it a different way from the beginning, it's definitely makes it easier to scale up and get to a certain point to where, shoot, now you can just do whatever's right. But it's that first one that handcuffs a lot of people, I think.
I think part of me just wants to be like, I could plant this tree over here, and then I could make a sitting area here, and I could fence it and make it a little nicer this way. And it's like, but wait, I'm really only renting there, so to speak. I'm renting for myself, but I'm renting. So, because I like a lot of that landscaping and yard work and all that stuff. So I need to stop myself.
Yeah, sure sounds like it. Because what did you say you want to build? You want to build like this whole
hobby farm with a greenhouse and
yeah,
an arboretum and and an orchard and it's
cool.
See, I used to own a landscaping company years ago, so my days of trying to landscape a house and all that stuff for fun is almost over. Just doing it for so many people and putting out your creativity for so many different people and cutting the grass. And I'll tell you, the biggest thing that ruined it for me was trying to do it when it's 90 degrees outside, which isn't hot for half the country. But when you throw 100% humidity on top of that, it makes you really hate it overall.
Real field temperature this morning when I got up at 7 was like 83 degrees already. So, because I'm down in Florida.
Yeah.
And I'm in the middle of the state where we don't get the breeze from either ocean. Yeah, it's there's a reason they call Gainesville the swamp. You don't get a breeze like you do anywhere near the coast. But the biggest thing I keep trying to focus on is the swath. It's about 15 foot by 50 foot adjacent to the ADU. It used to be the garage. And I feel like if I could make it feel like more of an outdoor yard, you'd get folks who would stay longer when they do rent it, because otherwise they're renting 320 square feet. So, I just think it would be, if it feels more like a interior and exterior room place, you're going to get better retention.
Yeah, that might be a good idea for your circumstance. I know the one unit I had at one point, I ended up doing a remodel, even though there's nothing wrong with it, just because I felt like the colors and just everything about the place was so dated that no one was actually calling it their home, in their words. And people were just being like, okay, well, this is just temporary. Because before I remodeled it and got these tenants in there, I couldn't keep someone in there for longer than 6 months.
Hmm.
And it was very hard to rent out. So it would take me like 2-3 months to rent out, have someone there for 6 months. Like the vacancy of that place was absolutely killing me.
And now?
I've had someone there going on a year and they're already asking me for the paperwork to renew them. I was like, you're not due for 4 months.
Hmm. Okay.
So where does your friend invest? The one you said that might come to Vegas, John?
He does not invest yet.
Oh,
He and his wife are getting ready to buy a house in the town that he lives in that's about 45 minutes away from me. So he still has to kind of get her on board. So in the meantime, I'm trying to encourage him to follow behind, because at the point that I retire, it would be nice if he's close enough to it to go on some trips and stuff.
cool. I think he'll have fun. Tell him it's gonna be fun, man. Tell him we're Crocs though.
I'll have to double check, but I don't think he owns any Crocs. Don't know. I don't know about you and those Crocs, man.
They're comfortable. They're versatile.
And they got 4-wheel drive mode too, right?
No, it's called sports mode.
Sports mode, excuse me.
Don't forget they also have cowboy mode too.
Oh yeah, there's a boots version one.
Oh, okay.
Yeah.
The best one was the one I sent Mark. It had the spurs and everything on it.
Oh yeah, yeah.
Have the silver tips too?
I forget. I gotta go look for that picture again.
My favorite picture I sent you was that guy. I've been looking for a motorcycle. There's a guy selling a motorcycle, and the last picture of the ad showed him sitting on the motorcycle, and he's smiling like that. And I shot the picture over to Mark. I was like, he's not smiling because he's excited about his motorcycle. He's smiling because he's wearing Crocs with socks. Because he was.
Yeah, that's a no. No socks and Crocs. Maybe in Vegas because it might be a little cold that time of year, but typically no socks and Crocs.
Well, you don't want the oil and the gas hitting you directly in the foot.
What kind of bike you looking for, Jack?
I'm not sure. I like the older style looking stuff, but I don't want to deal with all the maintenance of them. So I was kind of thinking about maybe a Honda because their parts are so readily available on everything.
Yep.
I don't really want anything too big and crazy. I was thinking like maybe like a 500 to 650s size, just something to put around the highways with a little bit and not be afraid to take with me camping and stuff.
Yeah, I think you'll wind up in the neighborhood of probably a 650 to maybe an 1100. So something that's a 500 in the Honda is going to be you'll outgrow it pretty quick. And it's just, not that it's not not that it doesn't have power, but 650, 750, maybe an 1100, it's usually a little more mainstream too, easier to find. So if you buy a Valkyrie, which I don't recommend, but I got a bunch of spare parts for one of those.
Yeah, I used to drive a Yamaha V-Star 1100.
Okay.
That was a nice bike. That was a nice bike. But my only real complaint about the whole bike in general was just the sheer weight of it.
Hmm.
Yeah, like I didn't care for how much it weighed because it fell over one time, and I didn't realize how top heavy that bike is, and trying to pick it up or pull it back up and stuff. It's like it was. I think it said over 800 pounds. I want to say it's like 850 or something like that. And I swear it felt like most of the weight was up top, and it was hard to get it back up.
Yeah, that can be a little bit model by model as far as some of them go, but I understand.
Mm-hmm.
Yeah.
Plus, it's been almost a decade since I've been on a bike, so I didn't really want to jump straight into it in 1100 again.
Yeah, I forget, where do you live?
Pittsburgh.
Busy town. Yeah.
A lot of hills, hills also.
Might be a thing where you need to kind of get reacquainted with it a little bit more into the country.
I was actually thinking about it was Cynthia's idea to get what do you call them? A couple small enduro bikes that can fit in the back of our trucks,
Hmm.
and take them out to the family farm and drive around the fields and putt around on the trails that they have and get refamiliarized with them, and take our tests on those, and then figure out what we actually want after that.
I would, if you're really trying to get back into that, I'd almost turn around and pay for the class. I assume they have them up there too, because
Yeah,
then it
that's
would
what we're
get you
talking
on a
about doing.
bike. They use 250s, and you'd be like, oh yeah, I remember most of this. And if you do want to go the enduros, the Honda Trails that they finally came back out with, those are pretty solid and they're going to hold a value. But if you could pick one up used, that would be logical in context.
Yeah.
Hey, don't go anywhere. Yeah, I'm gonna try and bounce off and then bounce back. I want to test something out, so just I'm gonna hop back in.
Okay.
Okay.
Oh, Esther's there. You have someone new you can chat with for a little while.
Hi, Esther.
Hey, Esther.
I just got back in Seattle. How are you guys doing?
Good. How about yourself?
Oh, I'm okay. And just being in the car for 3 hours.
It's been heavy traffic. You almost said 3 days.
Oh no, 3 hours. Yeah. Let's see, how many people? Oh, everybody left. You guys,
Yeah, pretty much everyone left. We're down to 5 people.
okay.
All the important people are here. Oh, and so is Mark.
Yeah, I'm back. So okay, good. I'm trying to wait. So when I take myself off video, what do you guys see? Okay,
Your
cool.
Logo. Nice.
Okay. No. So
Smoky.
Jack, can you go off a video real quick? I want to see if mine still shows up on your end.
I can join next week.
Cool. Okay. Hey,
Yeah.
Esther.
Yay. I can
Okay,
join
good.
next week actually. Yeah. Sorry, I'm late today.
No. Are you gonna be in Vegas, Esther? Jack, you can call. Yeah, you can go.
I don't know. Depends. I need to connect with people in here in Tacoma. See where they're gonna stay. If we can stay together or something. Are you guys buying the ticket now?
Oh, he is here. Curtis is here.
Yeah, I'll be there in Vegas. I got the ticket purchased.
Okay.
Do
Yeah.
you know Ray, Esther?
Mm-hmm.
He's gonna be going. He bought his ticket also.
Okay. I'm I'm not part of school, so
What?
what is school? How to join in? I don't know.
Yeah, it's only $20. Check it out. You
So
know,
I go to,
it's only month to month.
so
You can
I
always
go
quit.
to
I'll try and grab the link
rental
for
at
you.
a time. Uh,
He
Sugar website.
he probably has it on his website, but Jack said he's gonna put it in the comments, the link. Yeah,
Okay.
you should because you're not committed to like a year or anything. You can always
Yeah.
stop month to month.
Yeah, it's fine. I mean, I just and they meet when they meet to,
They have a
Um,
whole bunch
do
of
they
things
meet?
all the time.
yeah, it's kind of random. I mean, the accountability groups right now are kind of set on the Wednesday, Sundays, but I mean, as far as his interviews or special guests that come on, it's kind of it'll be on the calendar though, and so you'll have advance notice of when it's gonna be. So like, well, Matt the Mortgage Guy is kind of like the last Friday of every month, so you have access to talking to Matt the Mortgage Guy, and then
Mm,
he's had like Anna Kelly on, and
mhm.
Henry Washington was on the other week.
I really like that April Crosley one. That was a good one. I keep not finishing the Anna Kelly one. It's not because I don't like it at all. It's just there's so much going on that I can't just listen to it and walk away. It's a video you actually have to sit and watch.
Yeah. Yeah, I like April. I like
Yeah,
April. Yeah.
yeah. So hopefully she can. I think Zuber is giving her an invitation to the event, so I'm not sure if she's gonna be there, but I think he's trying to get her to be one of the speakers, I believe.
Mm-hmm.
So
Yeah, you
is there anything? Oh, you guys didn't go though, yeah. Only Mikey went. So I saw that Ned or Denver, he commented to hopefully make sure that this year there's name tags and kind of your social media handle, so it's easier to know who you're connecting with, or you can give them a follow. Because last year was I know Zuber said he forgot about it and it kind of slipped his mind, but you know, a lot of times you're talking to people and you didn't, you know, you've met them on social media, but they go by a different name. And then, you know, you're talking to them, you don't realize that you've actually kind of connected with them offline or something. So I think that would be super helpful for next year.
Yeah.
There there will be name tags. I just saw him talk about it in his most recent clip.
Oh, cool. Yeah.
Yeah.
There you go.
You
So
guys
yeah,
have
that
any idea where you guys gonna stay?
yeah,
Is
I
it
haven't even thought about it yet.
nearby the event or something? Nearby nearby the event.
Yeah. I mean, it's not. I mean, the event itself is like I wouldn't. It's not really buy anything per se in a
Oh,
sense.
uh-huh.
So I mean, you'd still be. I mean, but it's not a far drive from like downtown and stuff like that. So it's relatively close.
Do you wind up taking an Uber or did somebody drive?
Yeah,
Okay.
yeah. We took Uber.
Okay. Yeah. I haven't gone to Vegas for, I don't know, 20 years, I think.
Yeah. Keep an eye on that Mikey guy, man. He can get out of control in Vegas.
Yeah, maybe we can
He is still here. I
Crocs,
saw his stuff go unmuted.
Crocs
maybe
party. It's
maybe we can stick together, you know?
Yeah.
Renting an Airbnb or something, or
Yeah, yeah.
yeah, yeah. Sounds good. We can arrange it later, yeah.
Yeah, it's gonna be a East Coast, West Coast battle, I think maybe. I got Curtis and Wishing on my side though.
I don't know. Wisting might be coming on my side.
Mikey, were
That's
you gonna
so
stay in the middle?
What was that,
I don't know
Jack?
if he.
Oh, I was saying, Mikey, were you going to stay in the middle since you're a spy for both groups?
No, Mark on the Wednesday call said, yeah, we're all family. Two accountability groups is good for everyone. And then now on this one, oh, how the tides have turned. What happened to family? I thought we're family here.
Oh, we are. Just kind of, making trouble as usual.
I love it.
But I did say, because Jack was talking about the homeless situation in Vegas or something, I think.
Oh yeah, that one ad had me laughing.
Yeah, and I said that's why I'm gonna walk around with Curtis and Wissing or Frank, because I know I can outrun Frank.
Yeah, the one Airbnb I saw, it said, if you're afraid of the homeless, don't get this Airbnb, because although there's never been an issue, that they do walk out in front of the place from time to time. I'm thinking to myself, that's not really a selling point. I mean, who's going to be like, woohoo, the homeless in front of the rental?
Yeah. Hey, Christian is here. We're still hanging out, Christian. So introduce yourself, man. We're just shooting the shit for now.
Hey, brother. Sorry, I missed the whole thing, I think.
Yeah.
Oh, it's all right, man.
Sorry, I'm late getting in here, but right now we're in South Florida, originally from West Virginia. And yeah, just new to the group and trying to this accountability for them.
Cool. Florida, you said? John's in Florida.
Yeah, I'm down in Fort Lauderdale near Miami.
Oh.
Sorry to hear that.
I know. Hey, government work takes you everywhere. So, but luckily I bought a little house here in 2021 that I'm living in as my primary, and then plan to flip it into a rental maybe in about a year or so.
Okay, I'm up in Gainesville, way north of you.
Oh,
Absolutely.
Gainesville.
Yeah, I wouldn't choose to live here long term.
John, I have a friend live in Gainesville.
Okay, cool.
Yeah.
Yeah, I've been here since 2013 this time. So
Okay. Next time I go visit them, maybe we can meet up.
okay, that'd be cool.
Yeah. Do you have rentals there?
So no, I'm under contract at the moment, hopefully for something that will close next month for a
Okay.
house with an ADU.
Okay. Yeah, Gainesville is the university town, right?
Yeah.
Yeah.
So and sometimes I look at it and I think it's really expensive, and then I look at other expensive places and I go, oh, maybe Gainesville isn't so expensive. It just doesn't really cash flow that well either. So
Oh, okay. Yeah, you can rent to students there. Big students population actually.
yeah, like 80,000.
Yeah, that's
Out of,
big.
I think we're 200,000 when the students are here, and we're 120 when they're not here. So Jack, you were saying earlier about the homeless. I keep an eye on rentals, and there's an area that I refer to as the triangle because of the way the roads line up. And it was a 2-bedroom duplex, and I was kind of keeping an eye on that market. And in the realty listing for the rental, it actually said, make sure you know this market. We don't want to waste your time or my time if you don't know the neighborhood. I was just like, that would just be such a turnoff to, if you were looking at it for a rental. It was just like, wow. So
Yeah, someone being that abrasive about it. So, John, I did have a question about the Florida market.
Sure.
So what happens in a situation like with the insurance and stuff? If, like, let's say you put on a 50-year roof, will they cancel the insurance policy if it gets like past like the 15 years and stuff?
So the short answer would be, if you're talking about a regular insurance company, the ones that we do have left, they're happy to look at a 10-year roof or especially a 15-year roof and They won't write it on over 15. If you already have it, they might keep you. But state of Florida has a insurer of last resort, which is the state pool. So you can always get insurance there. But from what I've heard, they try and they push you out after a year and try and push you to these other little companies that are trying to start up in Florida. Arguably, you'd always have the ability to get the state insurance if no one else will insure you.
Okay. Yeah, I was just curious because with roofing technology getting better and better, and having like 50-year, metal roofs, which I'm sure are going to be a thing of the past at some point, it kind of seems a little bit ridiculous to cancel the insurance policy when your roof isn't even at its half-life.
I agree. And from what I've heard, sometimes they're flying drones over houses and they'll be like, we don't like the look of your roof. And you'll actually have to pay someone to go up and like blow it off and get rid of like pine needles and that kind of thing. So it doesn't look like the shingles are damaged versus they were just covered with pine needles.
Yeah, I'm not sure how they're getting away with that because, like, technically you own the airspace up to, I think it's like, above your house. I forget how high it is, and it might be different for Florida, but I'm not sure how they're getting away with that because technically that's trespassing.
I think if it's a company that actually has the right permits from the FAA to be able to fly the drone, and you're not flying in like there's certain areas you can't fly, like school zones near the airport, things like that. But the area that's not mentioned where you can't fly is a little more open. At the same rate, if it crashes in my backyard and I accidentally run it over with a lawnmower, so. But yeah, the house I'm under contract on has a new roof this year. So, but yeah, I do worry about the same thing. I mean, you're talking a metal roof that could go 20, 25, 30 years without, blinking. And yet, how's that going to work on the insurance?
Yeah.
Yeah, my experience here in South Florida is similar, but down here, it's hard to find homes that aren't in HOAs, number one. Most of the HOAs require tile roofs here in South Florida, Miami, Fort Lauderdale areas. So I think a lot of it has to do with the roofing standards that were created after the last major hurricane in the early 2000s that hit this southeast coast and other areas. But at any rate, I do have the Citizens, as you called it, the state-backed insurance company of last resort. Now, because I'm living in it, my rates were at $3,600 a year. Starting in September, they go up to $3,950 a year on a little, 1,500 square foot, 3-bedroom, 2-bath house. But I know there's a lot of people that are paying $12,000, $14,000 a year for their homeowners insurance, which has actually dissuaded me from purchasing more rental properties in Florida, other than the one I bought here to live in for about 3 or 4 years.
Yeah, at this point, I'm quoted 1,900 on a about 1,400 square foot, 4-bedroom, 2-bath. So,
yeah, South Florida is also plagued with fraud. So if you're in Broward County or Miami-Dade counties, you're going to pay twice, probably even what you pay in a lot of other counties in Florida.
Although your county by county, your county taxes are less than mine.
Yeah, that I can't attest to. I don't know.
Yeah, I'm in the second highest county in the state of Florida.
So Jacksonville?
No, Alachua County in Gainesville.
Gotcha, Gainesville.
Yeah, but as far as the insurance goes, I'm also like 60 miles from either coast.
Okay, wow.
So, it's when people talk about Florida, if you go from the Panhandle all the way down to you, it's like there's a lot of differences, a lot of variation. We're still number 2 in cattle production. So,
absolutely. Yeah, it is very different. Just like Texas, where I was, before San Antonio, Texas is so huge that you can't compare one market to another. And the metropolitan areas are much more heavily taxed. You know, the four major metros of San Antonio, Austin, Houston, and Dallas are all terribly taxed. I also probably won't buy any more rental properties there than the one I have because of the state. Because of the property taxes in those big metro areas. But if you get out of those four big metro areas, then it's a little bit more reasonable. But it's insane. You know, I'm paying, around $8,000 on a 2,500 square foot house, in San Antonio, and that's with a homestead exemption that I'm about to lose next year. So that's one of the problems. I'm in kind of sought after southern markets, but I'm looking elsewhere to be my primary investment states because these areas are just difficult to turn a profit in this environment.
Are you seeing the up here at least? I'm seeing the condo prices. I've been tracking them for a while, probably about a year now, and they were floating up a little, and then all of a sudden I noticed they started dropping in like $5,000-$10,000 hunks. And there's one in particular that's they're down to like 80 to 85, maybe 90,000. And what it turned out to be was because of the new state law requiring structural reassessments, the HOA fees were going up by 50 to 100%. And so the people who knew that was coming started selling. So all of a sudden the prices started dropping. So a condo that was 100,000 is now 70 because the HOA fee went from $300 to $470. And from what I hear, they're going to get another special assessment. That's, if anybody's up here in some of those have those condos, they're trying to sell out as fast as they can.
That's
Yeah,
interesting. A lot of people move to Florida actually, yeah. And they end up paying, then they end up paying high price for property tax and insurance, especially insurance.
Yeah, they do. But I also sometimes wonder if it's, depending on where they came from. If you came from, New York or Massachusetts or somewhere where your property taxes were 12,000, you get here and you go, oh, the property taxes are only 8,000. That's awesome.
Yeah. Washington's still okay.
That's where my daughter wants to eventually move to, which means I'll probably wind up retiring there.
Oh, any particular city are you looking at?
She would like to be within more or less 50 miles of Seattle.
Okay.
I'd like to be more like 50 miles away from Seattle. So we shall see.
Yeah, 50 miles is not bad actually. Still affordable.
Well, on the upside, we broke 2 hours.
Yeah, next week I may be able to join in earlier.
That'd be good.
Sorry. Yeah, sorry,
Yeah,
guys.
definitely.
Okay,
Yeah, I don't
think
like the long ones. Yeah, we can cut it already. I don't like the three. We got to keep it shorter than the West Coast.
yeah. I myself I don't really like long meetings.
Yeah, Wednesday's one. I mean, it's good. Wednesday's great. It does get kind of long though.
Yeah.
I like to listen to that one in different parts.
Yeah.
Yeah, there are
Cool.
so many, just by listening actually we learn a lot too from people's experience.
Yeah. You know what we gotta do? We gotta copy Mikey's thing. His kind of info sheet
Mm-hmm.
So that way we kind of just send it out ahead of time before the meeting, so everyone kind of has an idea of who everyone is, and that, or post it in the comments. But that way we don't have to spend every meeting for everyone kind of introducing themselves over
Oh,
again,
to
right?
introduce.
Yeah,
Uh-huh.
they can kind of just jump into whatever topics people may want to work on or discuss.
So do we contact Mikey then to put in the my info?
Sure, Mikey's the one. Mikey, I'm signing you up for that.
Yeah, I've wanted to do that, and I was telling people, try to put in your info, but I don't think people were interested on that. Well, I guess for the Wednesday one.
Is
Oh,
there
yeah.
how
This
to
isn't this
do
isn't
I
Wednesday, Mikey.
so
Huh?
Yeah,
What?
Mikey.
What?
We're saying this isn't Wednesday, Mikey. We're our own
That's
unique group. We might want to share.
that's true. That's true. Yeah, I'm. I'll look for the link right now and I'll post it.
Okay.
okay, so do I just respond to the Zoom link then? Zoom email?
Esther, if you want, you can just text me your brief bio or what you got, and I'll send it over to Mikey or whatever.
Oh no. I have Mikey contact.
Oh yeah, just kind of give him a little
Maybe
recap of who you are, and then
Mikey, I could just let me see. I could text you. How's that?
Yeah, and
Yeah.
and I tried to make it a Google link. I don't know if that's even a good way to format it,
Mm-hmm.
but anyone can edit it or anything. So it's kind of like an open type
Yeah,
of sheet
so
where.
like Google
Mhm.
Drive, and then make a spreadsheet and people can get access and
Mhm.
and they can update their info.
I think it looks good. It's 7 pages. That's pretty cool.
Yeah, I have to update because people are coming out with more YouTube channels. So I have to remember to add when the new channel pops up to add them in. But I thought it'd be a good idea because, I agree with Mark. It's like everyone
Oh,
repeating, their introduction over and over. It kind of
uh-huh.
gets, repetitive.
Okay, got it. Yeah, you got it. Yeah. Google Doc. Maybe Google Sheet, Mikey. Like Excel.
Hmm.
Huh?
Okay.
Like Excel, the name on the left side,
Mm-hmm.
and then whatever title is like investment or RE investment, and
Mm-hmm.
which area.
Yeah, and I thought it'd be cool if we could add, some resources that we find. I was thinking of like putting in
Mm.
lenders that I'd like to work with, things like that. That way
Um,
everyone could just kind of go back to that sheet or
yeah.
whatever, and just say, hey, oh, I'm looking for a lender. Oh, and then they could maybe do their own due diligence on all the resources in that link.
Yeah, I think so. Yeah. And then one column name, one column RE investment, and then contact if they want to have like Gmail, I mean, email or phone. YouTube channel. Anybody have YouTube channel? I don't.
Me and Mark both do.
Yeah, so that would be useful. Keep it in Google Drive and we can whoever have access. So whoever maintain it need to we can ask for access. So and then people can connect each other that way.
Yeah.
Mhm.
Actually, it
right.
looks
Well,
like the way that it was saved, we would already have access.
Yeah, I open it up so that anyone who has that link can edit it or do
Yeah.
whatever they want with it. Yeah, so feel
Yeah, so
free
you
if
could
you
just
wanna.
add yourself or update yourself. Yeah.
Yeah.
I'm gonna change Mikey's to passport, bro.
See, that's what I was worried about.
Hey, are you guys live nearby in Honolulu?
I mean,
We're
if
like
you, yeah,
opposite ends of the island.
Opposite.
on the island, you would say we're far, but like if you told someone living on the mainland, they'd be like, "Oh, that's close."
Yeah, I can go around Oahu in one day.
Oh yeah.
But for us, it feels far. Yeah, Mark.
Yeah, yeah. For us,
I
it's
don't know.
far.
I don't know why that is.
Maybe if I go there, if I go to Oahu, I'll contact you guys.
Yeah.
Yes.
Oh, Mikey, Justin Canberra's gonna be here. Shoot, what did he tell me? Next week, I think.
Oh yeah.
So he
wow.
wanted to get coffee. Yeah, he's on Kauai with the wife, or a fiance, I believe. So he's gonna swing by Oahu maybe in a week, I think. I think that's what he said.
Oh, nice. I know Coach Davis was talking about coming in like a couple months or something.
Oh yeah?
Yeah, he was on Dion's course call, and then he said that.
Cool.
I would like to get contact of Justin. I want to learn how to get property in Seattle or Western Washington area. So far, I can't get. From my analysis, there is no way for me to get it.
Well, he doesn't buy that much there now, right?
I think that's what he's doing right now.
Well,
in
yeah, but
Western
that's because he was investing in the cash flow markets first, right? So he has like I think 50 or 60 something doors in the
Yeah,
Midwest.
he started in Central Washington, and then now I think he's focusing in Western Washington. I would like to learn more how to acquire that, because I don't know, out of state is give me a lot of stress actually.
Well, but that's why, right? So he went out of state to increase the cash flow, and then now he's bringing that money back to Western Washington because he has
Yeah.
more cash flow coming in, right?
Yeah.
Why? What stresses you out about it?
Because like the contractors, right? I have two in Gary, and I would like to get more, but there's nobody can do the work actually, contractor. So it's like nobody um really can be accountable.
Wait, what do you mean no one can do the work?
Contractors.
Like they can't, it's above their scope? You mean the work is too hard
No,
for them?
they're too busy.
Oh.
Yeah, they're too busy. Yeah.
Well, so that's another thing about what market you invest in, right? Gary's kind of a, small in the nowhere area somewhat. So you're gonna be kind of limited in resources over there, right? So
Actually, the city nearby, the city adjacent to Gary, they're pretty decent. And Gary actually not that bad actually, but like I don't know, their government is is bad actually. So people live in Gary, they work outside of Gary. So that's the trend. Finding people who work in Gary is harder.
yeah, because it's a smaller, that's gonna be kind of typical for any small market in a sense, right? So the smaller market you invest in, you're kind of at a handicap of finding workers or contractors in a sense, because it's just the market that's, you know, it's a smaller market per se. So
Yeah, so I'm looking into like, okay, if I find property nearby where I live, so I can piecemeal I can piecemeal the work basically. You know, like I can find some people can do cabinet, can find people can do flooring, you know, do painting a little, you know, a little here, a little there. But when it's out of state, far away, you know, we need to contract with the general contractor. I can't really do, you know, like breaking the work. It's hard to find people. You know, whereas, you know, nearby Seattle area, or maybe I have to drive another 45 minutes, still all right. Then I can find someone can do the work little by little. That's what I'm thinking. I don't know how you guys do it out of state.
yeah, I mean, there's always people to do work. I mean, you know, Pittsburgh is just a bigger market too, right? So you have more resources available. So like you're saying, you know, like I said, Gary is like I said, it's just a small town, so you're gonna be limited in workers and resources there. So, you know, that's kind of one of the drawbacks of investing in smaller markets. Yeah, the cash flow is greater, but you're also limiting yourself on probably people that can do certain jobs or the work, right? So,
Yeah. Mm-hmm.
but like you're saying, Seattle, you probably have a lot more abundant resources there at your
Yeah, at least
fingertips.
at least I can do, you know, don't have to contract the whole the whole job. I can do piecemeal.
But Millennial Mike doesn't have, he must have a bunch of contacts in that area, right? That can help you folks out with the work that you guys are looking to get done.
Yeah, a lot of them work for him right now.
Oh, like doing his jobs, you mean?
Yeah, he has so many projects going on. Yeah. Yeah, which is good for him, you know. Yeah, that's what
Well,
I'm thinking. If I can find properties nearby rather than all the way to Gary. Yeah, Gary really have good cash flow actually. Because property is very low
yeah.
price,
No,
and
yeah.
the rent is a little bit low than you know than Washington, but you know since property is like one third of the price, one fourth of the price, so still good outcome. Yeah.
Cool. Yeah, yeah. Well, yeah. Oh, see what you're not on social media, Esther? You can't connect with Justin, or you haven't seen him at any of the groups?
No, I'm on Facebook.
Oh, you should just message him.
Oh, I don't know where he is.
Oh, he's on Facebook. You should just
Is he
message.
on Facebook?
Yeah,
Justin? Okay,
yeah.
maybe I'll look into that. Yeah, I'm on Instagram also, but I sometimes I can connect. I don't understand Instagram how that work within the people posting within few seconds, like 15 seconds, 20 seconds, and then all of a sudden gone. So oh my
Yeah.
God, I'm an older generation. I'm sorry.
No, it's just like how I feel when I jump on TikTok. I have no idea what's going on over there. All right, well, this was
Okay.
a fun one, and yeah,
Okay.
we'll see you guys Wednesday maybe.
Okay. Good start, Mark.
All right, Esther.
Okay. Talk to you later,
All
you
right,
guys.
everyone.
All right,
Okay.
thanks everyone.
Yeah.
Okay,
Bye.
bye.
All right, bye.
All right, John. See ya.
See ya.
Good job, Jack.
Yeah,
Thank you.
good
All
job.
right, fellas.
Thank you. See ya.
Bye.